Hi and welcome, chartists. You might be wondering, what is this scribble there next to me? And this is something that we called Elliot waves. And for those of you familiar with Elliot waves, you will also know that it is most probably the most difficult trading strategy out there. And as always, Elliot waves also has a bearish and a bullish scenario with certain levels of invalidation. So in today's update, I'm just going to keep it simple. I want to present you with two main scenarios, perhaps throw in a third scenario in there, and please write in the comments down below which scenario you prefer and you think is going to play out. And perhaps you know of a scenario that I haven't tackled. Cool, yeah. So diving into the price of Bitcoin here, scenario number one, and I know it looks like a mess and what is going on there. All I see is numbers and lines and yellows and blues. I will take you through it step by step. I will simplify it for you guys so that everyone understands what's going on here. But these are the two scenarios that I'm currently watching, is scenario number one and scenario number two. And we'll go through them briefly, and then down in the comments you can let me know which scenario do you think is going to play out. Okay, don't wait until the scenario play out before you comment. Please comment right now so that we can see who nails this strategy going forward. And also please like and subscribe to my channel so that I can keep on bringing this amazing analysis to you. Also, two of my favorite exchanges that I like to trade on is Mexi and Bybit. The links are down in the description. Please support my channel, use my links to sign up and trade with these exchanges. It costs you nothing and it helps support this channel. Okay, let's get serious. Scenario number one. First, before we dive into the scenario, the one thing to keep in mind is that whatever happens locally here will determine the bigger wave structure going on. Okay, but this scenario is quite interesting, and to keep it simple, just look at this blue line that I have here, where I have the 1, 2, 3, 4, 5. So the basics about Elliot waves is that you have 5 impulsive waves to the upside or to the downside, depending on whether you're in a bull cycle or a bull run or leg, or you are falling down with impulsive waves to the upside. So this can either be to the upside or to the downside. But the impulsiveness at the moment is to the upside. The question now is, are we making a final and fifth wave over here? Or have we already completed the fifth wave? Or looking at scenario number two, we have 1, 2, 3, and potentially coming down to complete the bigger fourth wave for then continuation to the upside, where we have this beautiful 50,000, round about the $50,000 area that everyone in social media is talking about, to say that this is the target and we're going to smash that level. Perhaps only then will we get that correction. What do you guys think? Okay, also I just want to briefly go through Ethereum. You can see that I've been mentioning in my previous videos as well. Look at this beautiful trend line to the downside, finally breaking through. Is this a fake out, or will this be a continuation to the upside? Okay, AR. Once again, I moved my trend line slightly. I played this breakout, and then I moved my trend line and I played this breakout. And now we're currently consolidating against this trend line again. Will we see another breakout? I also included this little home line, if you would like to call it that, to say that any test back into this home line is either a great buying opportunity, or the breakdown of this trend line is a get out and wait for another trading opportunity. Zilliqa, I'm also looking at Zilliqa. I've been tracking this coin for such a long time. I'm here on the 1 hour time frame, and you can see this downsloping trend line that I have over here finally breaking through. Will this momentum hold? And I also see some nice green volume starting to kick in. So just keeping an eye on these coins. Okay, but for now, the reason you guys are here and what I want to discuss today is, let's go through these two scenarios. The first scenario, and let's zoom in, is to say that we've made 1, 2, 3, 4, and we are now busy still with the fifth wave, which means still momentum to the upside. Okay, when you then zoom into this price action that we've made over here, is to say, okay, and let me go on to the 4 hour. I'm going to take you through it step by step so that everyone understands. Each wave has 5 waves inside of it. So if I take you here in the third wave, for example, you will see the third wave has 1, 2, 3, 4, 5. The first wave also has 1, 2, 3, 4, 5, but the first waves are usually very complex to count inside because they start off very small, like a small wave, and then the ripple starts getting bigger. So third waves are always the best waves, the waves to trade, because they have this impulsiveness to the upside. They have beautiful blue bull flags that only break upwards, like with Solana. Solana, you guys have seen that bullish momentum to the upside. That is a third wave. It's an impulsive, aggressive wave to the upside. Beautiful waves to trade from a trading perspective. Okay, now what we're seeing here is, if this is the end of 4 and we've completed 5 and we've made 4 over here, now we have 1, 2, 3, where we've made the yearly high. 3 can even move up here, 4, and are we now busy with the 5th wave over here, which also completes the bigger 5th wave. Okay, zooming out just to show everyone. 1, 2, 3, 4, 5. So this is the one scenario that I'm keeping in mind, is to say that what now needs to happen is we need to start finding impulsivity to the upside to go and complete the 3rd wave inside of this 5th wave to the upside. Okay, so it's important that we move up to at least the 1.618, and what I mean by that is a 3rd wave target. A common target for a 3rd wave is you take your trend base FIP from the low of 1 to the high to the low of 2. You reverse it depending on which way it's showing, and the 1.618 is generally a minimum target for a 3rd wave. 3rd waves loves the 618 targets. Okay, so it can be expansive. 3rd waves can go to the 2618, 3618, even the 4 and the 3 and the 2 levels. It does turn around at those levels as well, but it generally loves the 618 levels. So how high can this expensive move go? Okay, for now we stick to the minimums. A 3rd wave minimum target should be around the 1.618. Okay, so for us to remain bullish, you want to see this hold, the wave 1, 2, and you want to see continuation now going to the upside, not really having any deep retracements until we hit this level. Then for a corrective 4th wave, and then finally the 5th wave, which completes the 5 wave structure inside of this mini range. It completes the 5 wave structure inside of the bigger 5 range, 1, 2, 3, 4, 5, and also it completes the 5th wave structure inside of the bigger blue that we've been tracking since when's that date? Since 11 September. Okay, so this is scenario number 1, is to say that we need to continue impulsivity to the upside in order to complete this wave. So scenario number 1 then says we are potentially going to hit close to the $50,000 level before the year is out. Okay. Also, keep in the back of your mind, institutions are closing down, people are taking breaks, it's the festive season. Will there be enough juice in the tank to send us here to these all-time high levels purely based on retail cash? Okay, because I seriously doubt that institutions are going to help drive the price up while their doors are closed for this festive season. So perhaps, maybe I'm making the wrong assumption here, but this is the one scenario that I am watching, is to say that all the 5s align here. It's like the stars aligning to say that this could potentially be the turnaround for a move down, for a deeper ABC correction, which will then take place in January when the ETFs are supposed to launch. Okay, now let's go through scenario number 2. It gets interesting. Switch scenario 1 off, can take this out the way. Scenario number 2 says, okay, let's just zoom out to show you the entire structure. Take this out the way. Okay, scenario number 2 says that we've only now completed the 3rd wave. 1, 2, 3, 4, 5. Okay, something about this scenario makes me wonder if this could not potentially be this scenario that's going to play out, considering what I've told you about the festive season now kicking in as well. Okay, but let's go through it quickly in this little area over here. So here we are expecting a deeper fourth correction for then a continuation to go and complete the fifth wave, which is at the $50,000 level. And you will also see the completion of wave 4, and it's not 100% accurate, but it's estimates of how I'm working it out, give or take, 10-20%, can never be 100% accurate. Wave 4 then completes here around 31 December, where we can then potentially in Jan, when everyone opens, start open for business, people come back to work, institutions opens their doors, start pushing the price up slowly. So my personal opinion is this is perhaps the best scenario for where we are right now in this time of year. Okay. And I could be wrong, so please share in the comments what is your outlook and where do you think we're going to go before the end or the year is out. What I like about fourth wave is fourth waves are usually very complex structural up and down. You know the range, just trade the range. It is very slow and grindy, and it can go climb, fall down here, and then even when it gets here to the bottom, it can consolidate, and then all of a sudden you have this explosive move to the upside. Okay. So at the moment, I'm favoring this scenario more than the other scenario, but anything is possible. Okay, so let's zoom into the structure over here and see, well, what are the levels that we need to watch out for this scenario to remain valid? Okay. Looking at this structure that we've had over here is I am then looking at an A, B, a higher B, and then continuation to the downside to come and complete the C wave. Okay, so I see this move up as being corrective and not impulsive, which means that Bs can go higher than the initial wave, which we call B expanding flats, and I'll show you the targets. When you take your trend-based fib from the high of 5 to the low, you drag it across. Okay, your 1-to-1 ratio and your 1.2382 and your 1.236 are very common expanding B flat targets. Okay, so could it be that we are going to climb up here slowly and perhaps SFP from this high over here? So very important, please go and put your SFP levels in there. I like to make them a little bit solid, change them to white, and write in there SFP. Okay. And what I mean by that is when we get up here and you see us breaking through but losing momentum and getting acceptance back below this level, that is your ticket to short for an ultimate nice correction to the downside. Okay, C waves, as a little hint, tend to be very aggressive to the downside, and when it does hit the bottom of the range, it can consolidate for quite a while before the fifth wave starts. Okay. So this is the B expanding targets that I'm watching, and I've also mentioned these targets in my previous videos as well, is that if this is not an impulsive wave to the upside, this is the corrective structure that I'm looking at, which then means from a bigger picture perspective is during the whole of December, perhaps we even fall down from where we are right now. And just to show you guys, just want to take the scribble out the way. Okay, you take a normal fib from the top of 5 to the bottom of wave A, you drag it across. From wave A to B, the 0.88 is also a common B wave target. Unfortunately, B waves has many targets, okay? So it's always difficult to know whether you have impulsiveness to the upside or whether you're actually correcting and turning around. So these are just definitely levels that you have to observe and watch price reaction when we do get there, okay? But I am looking even at this level where we are right now. Could it mean that when I zoom in here, let me zoom in here. One scenario that I am watching is to say we could potentially even SFP from these highs without grabbing the liquidity at the 1-to-1 ratio. Okay. Where we SFP, not even reaching that level, getting acceptance back below for continuation to the downside. That is also a valid trade. As usual, you'll stop above the wick, and as soon as you are in the green, please protect your cash, move your stop loss to break even. If you get up here, you break and you stop yourself out. Now your stop loss is at break even. You're not losing any cash. You come down again, getting acceptance back below the level. You enter again. Don't be scared to re-enter a trade. And that is why I love to protect my capital, because when I get stopped out, I lose nothing. But then don't be scared to re-enter the trade. Okay, you need to learn. Some people, when they get stopped out, whether they've lost or not lost, they get scared and they don't want to re-enter. Okay, just some trading knowledge over there. What else? I think that's basically the scenarios that I wanted to take you through. The other scenario is, let's go back onto the 8 hour. Let me take the brushes out here. Switch scenario 2 off, just clean it up a bit. Okay, one scenario that I'm also watching is to say that, well, what if we're going to have a deeper correction to the downside? Okay, so let's go on to the 8 hour. And this is a scenario that I'm not throwing out the window as yet. We can take this out as well. Is if I switch on scenario number 2, okay, you'll see that I have an invalidation over here. This invalidation means that what if, so just a little bit of education. If you take a fib from the low of 2 to the high of 3, your fourth wave is not allowed to hit the 0.618. If your fourth wave hits this level, you've counted your waves incorrectly, because then it becomes, it's not impulsive anymore. It becomes a corrective structure, or it's maybe the end of something and the start of something new. Okay, so your fourth waves from an Elliot wave theory perspective is your common targets are generally the 382 to the 0.5 fib level. So I've just put the C and the fourth over here at the 382 because there are levels of confluence, and perhaps in my next video I will show you the levels of confluence that we have at each level. And even with these potential fifth wave to the upside, and even with the B wave to the upside, you will see there are daily levels, there are value area highs and naked point of control. So please make sure that you've got those levels marked out. Also, I did make a short educational video down in my video links in the description. Just go search, you'll see that I've made a video for how to plot daily, weekly and monthly levels. So go check out that video, very short educational video. Go put in your monthly, daily and weekly levels to find levels of confluence where we could potentially turn around for wave B and where we could bounce for wave C. Okay, also, you know, take your fibs into consideration and things like that, but stay with me on this channel and I will educate the hell out of everything and try and make it as simple as possible so that everyone can understand why am I doing certain things, what are the levels that I'm watching, and why am I watching those levels. But for now, I want to stick to these 2 Elliot wave scenarios. Okay, keep it fun. Okay, so from an education perspective, 50% to 382. What I have seen in the past, generally speaking, when a C wave comes down here, it likes to first react with this 382 for a bounce. Okay, and then it consolidates. You trade the range, you know, top of the range, bottom, it creates a little range, and before it moves, you know, you have that lift off, the Elon Musk rocket to the moon. It comes and it grabs the liquidity, it bounces on the 0.5, and then it shoots up. Okay, I have seen that happen often. Okay, but we could also come and bounce on the 50% and then bounce 382 and then bounce. But from a probability perspective, I like to see the bounce on the 382, and then lastly, when the range is finished, you grab the liquidity at the bottom and then you move up. Okay, so the last scenario that I want to share with you is to say, well, what if the whole structure is finished? What if we have completed wave 5 already? What if, and just keep the blue in mind, don't look at the counts that I've got in between, but what if this is the structure and we have now actually finished this entire structure for a deeper correction to the downside? Remember then what I said, this is the end of something. So you will see that I do have a trend sloping up here, and what this could mean is if this structure is indeed finished, this move that we have currently to the upside is a corrective wave, and you could have a B expansive flat, or we could turn around where we are right now. Probabilities then state is to say that, well, we could then have a much deeper correction to even come and bounce on this trend, even hitting the 786 Ideally, I would not like to see us hit this level, because that could spell that we are going to go to much, I mean, this is $28,000 already, to much lower levels. So ideally, you want to see a bounce here at the 50% or even the 618 level in confluence with this trend that we've got here, which then means this is a 1, 2, you see now the waves becomes bigger, and now we're going to start a massive impulsive wave to the upside. And your 3 waves, like I've said, is my favorite waves to trade, or are my favorite waves to trade. Okay, so we'll have to observe what is going on here. So the 3 scenarios explained in as simple language as I possibly could explain it to you guys. I hope this makes sense. Please post in the description or in the comments down below which scenario is your favorite scenario, and if there's anything perhaps that I've missed or I'm not seeing or not taking into consideration. Until the next update, see you in the next one. Cheers for now.